Welcome everybody to both sides of the conversation to tonight's Educational Thursdays. We are here by a lovely local native in the Bay Area making major things happen in the real estate industry. She's going to give us an amazing PowerPoint presentation tonight. Tonight we have Rhea Cotton going to introduce our bio, and then I'm going to turn it over to Rhea to start our presentation. Rhea Cotton is the broker owner of Cotton Realty, a virtual brokerage focusing on economic development and real estate sales. Cotton Realty agents are spread throughout the neighboring California counties to strategically meet client goals as a collective organization. Rhea's career in real estate started in 2004 supporting loan origination, appraisals, and underwriting with World Savings. She advanced to wholesale accounts executive, managing broker accounts. From there, she managed an entire region during a down market, leading her company in sales at Wachovia, and then they merged with Wells Fargo Bank. As a realtor and a real estate broker, she represented residential and commercial buyers, sellers, and also enjoys project management for independent builders and new construction. As 2020-2021 president of Women Council of Associate Real Property Brokers, Rhea leads the charge to elevate the standards of women in the real estate industry by encouraging leadership, education, and through exchange of information through the group learning techniques, and to provide an opportunity for women to increase their knowledge and their expertise in all facets of real estate. When not obsessed about real estate, you'll find Rhea being a supportive fiance and a mother of three. From that, I'm going to pass it over to Rhea, and you could reach out to the people and go into the presentation, Rhea.
Okay, great. Thank you, John, and everybody that's part of both sides of the conversation for allowing me here today to share information about home ownership. I love everything that both sides of the conversation is doing for our community. And today we'll be talking about the home buying process. And in about 2 weeks, I'll be joining you guys again, and we'll dive into the purchase agreement. So understanding a purchase contract and any other things that come up or that you are interested in learning about as it pertains to real estate. Definitely reach out to both sides of the conversation, and I'd be happy to come back and join again. So at this time, I am going to share my screen, and you guys can, looks like I'm already the host. And then you guys just can confirm that you see my screen. That would be great. So do you see a screen that says Cotton Realty?
Yep,
Okay.
you up.
Okay, so starting off, I just want to introduce my team. So I am the broker owner of Cotton Realty, and we cover all of Northern California, soon to be covering Southern California. I just wanted to put out some of the areas that we do serve: Alameda County, Central Valley, Contra Costa, Sacramento. As John mentioned, we are a virtual real estate company. So virtual meaning that my team and the agents are focused in various different counties, and we are able to share information regarding real estate, the market, and properties. As we all know, people are moving all throughout the Bay Area, so it's crucial for me to have a pulse on the entire Northern California area, and we do that through our team. So just to show you what we cover, just some of the recent sales that we had. We had a couple sales in Oakland, El Sobrante, Fairfield, Stockton, and Concord, just to name a few. So you see we're all over the board in various different price points. So now let's talk about you getting into home ownership. So, and where does that begin? So home ownership, and I just want to state that I believe John will be fielding questions at the end of the presentation. So if you have questions for me, please feel free to include them, and John will address them at the end after I go through my presentation. So home ownership starts with a buyer's consultation. And I say it starts with a buyer's consultation because here at Cotton Realty, we are community-based, and we believe that preparing you for home ownership is teamwork. And so we are working with you even before you're ready to buy. So it's not just coming to us when you're ready to go search. We start with an analysis of what areas that you're looking to buy in, you may be pre-approved for one amount, but you want maybe in an area where that pre-approval doesn't match the area. So we talk about ways in which we can find you properties in the community of which you want to purchase. Also, we recommend various different lenders. So everyone isn't put into one box when they're out to purchase. Some people need down payment assistance. Some people need credit repair. So we work with our clients on that, and we direct you in the right path based on what you need, and we uncover that during the buyer's consultation. So in addition to that, once you are pre-approved and you are ready to search, then we go into detail as far as locations, bedrooms and bathrooms. Are you okay with repairs and remodels? Because there's certain lending programs that will allow you to renovate a home. Your price range, and what your priorities are as far as if you're doing a short-term purchase, you plan to live there about 5 years, or you're at a point in your life where you're looking at your forever home. And also with investments. So you may already have a home and you're looking to now create investment opportunities. So we can discuss that with you as well. So when you're preparing for your lender, one thing that we discuss and tell you that you will need to provide for your lender are some documents. Usually when you're getting a loan, they are looking at three things: your credit, your capacity, and your collateral. So your credit is basically how responsible you are with your payments, looking at your credit report. Your capacity to pay, so they look at your gross income or all of the income of those that will be going on the loan and what you will be able to afford with your credit debt versus what you want in a house. So that's your capacity to pay. So they're looking at your income. And usually with that income, they're usually looking at anywhere from 43% to 50% of your gross income as what you can allot to a full mortgage payment and any other credit debt that you have on a monthly basis. Okay, so they'll ask for your most of them will ask for your last 2 years tax returns, your W-2s if you're a wage earner. If you're self-employed, they want to know that they want to see if you're a sole proprietor or if you have an LLC. They'll ask for your year-to-date profit and loss statements. So if you are self-employed and you're not keeping good track of your books, that's something that you would need to work on, and that's part of the pre-approval process. So when you're getting pre-approved for a loan, don't get discouraged if there's some things that you need to work on. That's the whole point of getting pre-approved. The whole point of getting pre-approved is to see where you are at in the home buying process. You may be ready to go and you maybe need to work on some things, and that's okay. And that's we're here to walk you through that process and support you and motivate you through that process until you get to where you need to be. For as assets, they're looking at bank statements, retirement and brokerage accounts. So your last 2 months bank statements or your last quarterly retirement statement. And it's always good to show all of your assets. So I was in mortgage prior to doing real estate. And for some reason, some people would not want to show all of their assets, thinking that, oh, if I show all of my assets, they'll ask for all of that for purchasing a home, and I don't want to give all of it. And that's not the case. You need to show not only assets, money that you will be contributing to the purchase, but they also need to see that you have reserves. They need to see that after you make your purchase, you will be able to have some reserves, a nest egg, to basically address being a new homeowner and having something to basically fall back on. So always show all of your assets that you have, and then if you have any gifts, so let the lender know everything up front. If there is a family member that plans on giving you a gift for your down payment or your closing costs, let them know that up front so they can have a full picture of what you are working at. Ultimately, this is your purchase and your decision. No one is going to force you to do anything that you don't want to do. So it's best to have all of your information up front and visible so that they can make the best decision on your purchase power. And from your purchase power, you go from there. Okay. So rents, so they will ask for, they may or may not ask for proof of last 12 months of your rental payments. If you don't pay rent, then you let them know that as well. So let them know that you haven't paid rent or that you're living with a family member, so they can put you in the appropriate product that will address that in advance. So if you've been divorced or you are legally separated, there's documentation that you will need to prove that. Again, a down payment gift letters will be required as well. So let's say you have done all of that, you have the credit, you have the pre-approval in hand, and you are ready to hit the ground running. That's when we set you up with a home search. So what you'll see on this slide is basically a map. And so on the map, we have various different ways to look for property. We can look for property based on the city. And then we can also focus on neighborhoods. So if there is a particular neighborhood that you're looking to purchase in, we can basically circle out on our search engine and circle out a community of which you want to purchase. And then what we'll do from there, if you're looking in a particular community, we will look at what the past sales are within that area. So a lot of people are on Zillow or Redfin looking at properties listings, but you never really always pay attention to what they sell for. So what a property is listed at may be for marketing purposes and to entice you. But what the area is selling for is something totally different. And so it's very important that you have a real estate agent that you trust that can explain to you what the market is, what it's doing. There's some areas where you'll see listing prices that are $200,000 below what the properties are actually selling for in that area. And that can be very discouraging. I work with a lot of buyers all the time, and that's why I take the time to educate them on the comparables in the area and the sales in the area, because I don't want the search for a property to be a discouraging process. I want it to be something realistic and something that you can attain. And so with me sharing the sales in various different neighborhoods, it's just me reaching out and letting you know where the market is. Now, there may be a particular neighborhood that you want to buy in and you want to get creative on how you find that home. We have access to off-market properties. We also have ways in which you can maybe take a house that needs a little work and to renovate it. And so that's a whole nother discussion and topic, but there's creative ways to basically obtain your goal, but you have to have realistic expectations. And so we set up the search engine and we can change it based on your criteria, and it sends out, it can send out daily or weekly new listings to you all the time. Now, sometimes when you are signed up for a home search, you may find some properties that aren't within your home search. And that most likely tends to be when you've reached out, you're starting to look in another community, or it's something that you didn't ask for. Maybe you asked for a 3-bedroom, 2-bath search, but you might have found a 4-bedroom that you really like. So it's very important to keep communication open with your real estate agent. And if your needs or desires change while you're looking at a property, definitely communicate that with your realtor. So next step is making an offer. So at the point where you have actually found a property and you want to make an offer, one thing that I tell my clients is everything is negotiable that's within reason. So, so sometimes if the market is slower than others, we can put in an offer that's below list price. If it is a competitive market, and again, I go over comps, then you may put in something that's above the list price. But the purchase process, there's negotiations, which we'll go through in a minute, all the way through the process. A lot of negotiating points, and various different things that make your offer maybe more competitive than the next person. Okay, so you can have your offer accepted, then you have the green light to move forward. You may have your offer rejected because they accepted another person's offer. In that case, you can ask to be a backup offer, where if that deal doesn't fall through, you would be considered for in a backup position where you automatically go into contract after that person. Or you may receive what's called a counter offer. And a counter offer basically can be a variety of different things. They may come back to you and ask you for a higher price. They may come back to you and ask you to change some of the terms that you put in your purchase contract. And again, remember, we'll go over purchase contracts in a couple of weeks here on both sides of the conversation. So after your offer is accepted, the next step would be to put in your escrow money deposit. So it is your good faith that you're putting in with a third party escrow and title company that you will be moving forward with the transaction. Okay, so that portion of money can vary either 1 to 3, usually 1 to 3% of the purchase price. Okay, so you take those funds and then you have a limited time to get those funds into escrow to move forward with the transaction. Okay, one thing that I recommend when you are setting that escrow money deposit amount, that you talk to your real estate agent and know what that amount is, so you have that money ready. Sometimes people are putting in their pulling their money for their transactions through a 401k, and they need to do a 401k withdrawal. Sometimes your 401k withdrawal may take longer than what's on the contract, and then you're out of contract because you didn't prepare in advance. So, or again, if you're getting gift money, you have to have the donor ready to put in the escrow money deposit. So a lot of people ask, when you talk about the escrow money deposit, is what happens to that escrow money deposit? And so basically it is applied to your closing. So you have your transaction loan will be made up of a down payment as well as your closing cost. And that money will be applied to those things. And another question is, well, do I lose that money if I back out of the contract? Well, what we have in the purchase agreement are things called contingencies. And the contingencies are ways in which you are allowed to back out of the contract and get your escrow money deposit back. So one of those contingencies is your inspection contingencies. So with your inspections, some people will do amount of days, so it can be 7 to 14 days to do any inspections, which is your due diligence, because you've never lived in the house and you want to know what the condition is of the house and then how to prepare for what those conditions are. Okay, and so basically you set the contingency. Let's say the contingency is 7 days. So you have 7 days to, if you choose to do a home inspection, which is an overall look at the home, pest inspection, which looks for wood destroying organisms around the house, and then the roof inspection. It gives you an idea of the life of the roof and if it needs any immediate repairs versus long-term repairs. Now, in the inspections, once you review the inspections, it's really an overall view of what's going on with the house. But there may be some immediate concerns, maybe some health and safety issues that come up in these inspections that you would like addressed. And so you would need to address those issues during your inspection contingency. So if you need to repair, you want some repairs done to the roof, you put in a request for repair. So remember I said purchasing a property, there's a lot of negotiation that goes on. This is another negotiating point. So you prepare the request for repair to the seller and say, hey, I want these 3 items completed before close of escrow because I'm concerned with these items and how it relates to the house, and I don't want to pay for them myself, or you don't have the funds. Okay, so the seller could accept your request for repairs and say, okay, we'll get those items done by the close of escrow, and we can move forward. They may say, we don't want to do anything at all. It's as is. We don't want to do any work to it. Or they may say, we'll meet you halfway. And then sometimes what you'll find is if someone is selling their home and a lot of their funds to repair their home, it may be tied up in their house. They may have tons of equity in their house, but they can't pull any equity out until this transaction is over. So then they may offer a seller credit. And so what a seller credit says is, we're not going to repair the roof, but we will give you $5,000 from our net proceeds towards your transaction. And then you'll have some money towards your closing costs at the end that you then keep in your pocket and do the repairs yourself after the transaction is complete. So there's a variety of ways to deal with this, but after you've dealt with it and you guys have come to an agreement, you move forward and remove the contingency. If you cannot come to an agreement, you cancel the contract within those 7 days and you request your escrow money deposit back. Okay, so let's move on and assume that you guys have come to an agreement and you've removed your inspection contingency. So now, once you've removed your inspection contingency, you can't go back and say, oh, and I want this fixed as well. You've already removed the contingency, so the seller has no obligation to negotiate with you at that point. Next is the appraisal contingency and doing the appraisal. So some people get inspections, home inspections, confused with appraisals. So a home inspection is identifying the condition of the property. An appraisal is identifying the market value of the property as it relates to similar properties within the neighborhood. And this appraisal is done by a third party through the lender to basically confirm for the lender that they are basically loaning you money on a property that's worth, let's say if the contract was for $500,000, they want to know that the house is worth $500,000 and not $495,000. Okay, and so if the value came in below $495,000, you're back to the negotiating table. Is the seller gonna come down, or are you gonna bring an additional $5,000 because the lender will only lend on the $495,000? So I know this whole process that I'm saying can be overwhelming, but I do one-on-one consultations at the beginning of the transaction and throughout. So this is a good information dump on everything that goes on so that you can basically kind of know what to expect, but dive deeper into all of these things on your own personal research to be prepared for home ownership. Okay, so as the appraiser is looking at the homes in the area, they're looking at the home size, the square footage. So they're comparing, if you have a 3-bedroom house at 1,500 square feet, they're looking for like properties. They're looking for other 3-bedroom homes with 1,500 square feet. If they can't find those model matches, then they will do adjustments on the appraisal for it, or they may go further outside of the area of their comps that they're looking in to find a match. So site conditions, they'll look at the, what the sales are in the neighborhoods. They'll look for any major defects, especially if for foundation, chipping paint, if it looks like the home hasn't been maintained. They'll also compare and measure the size of the house versus what is on public record. So there's sometimes you'll find a home that is 1,500 square feet, but on record it is 1,200. So it may be that 300 square feet of that house may be unpermitted. And so that will affect the appraisal as well. So after the appraisal, so we basically have our value in at $500,000. We're ready to remove our appraisal contingency because the value came in. So now the last contingency that we will address is the loan contingency. So we did inspection, appraisal. Now it's time for the loan. So a lot of people say loan contingency or conditional loan approval, but I was pre-approved at the beginning. Why are underwriters asking me for more information? Well, again, the underwriter is evaluating your entire package, including the appraisal. And so there are some lenders that will address and submit to underwriting. And then there's some that will wait until the appraisal is complete and then submit to underwriting. And so this is very important, all of these steps, because we have to know what the timing will be for close of escrow. So if you agree to close this transaction in 21 to 30 days, you need to know that your lender can meet those expectations. Okay, and sometimes if you're doing down payment assistance, it could be 30 to 45 days, maybe a little longer. So when you're setting these contingencies, you don't want to be out of contract. So you want to address these head up. So when you're doing when your underwriter is reviewing your file, they may ask you for questions about your credit. So on your credit report, you may have name variations, address variations, variations on your job that doesn't match your loan application. You may have some old collections. That's another thing a lot of people worry about are collection accounts. And so I always say talk to a lender and get a pre-approval before going and paying off old collections, because a lot of those items may not be required by the underwriter to pay off. And that could be more money that you keep in your pocket in order to maybe update your house when you purchase. So so there's a lot of benefits to getting pre-approved. They look at job stability. So they may have, you may have provided them paycheck stubs, but when they call and verify your work with your employer, they find out that you have overtime. So they'll call and see, is your overtime consistent? Has your overtime been cut, which has happened a lot during the pandemic? So the amount that you qualified for possibly at the beginning of the year may have changed if your overtime is declining. Bonuses. So some people receive bonuses. So they look at 2-year averages of the type of bonuses that you're receiving. And they usually want to make sure they're either going steady and up and not down. If they go down, they may take a lower average of your income, and that could affect your the amount that you're approved for. As I had mentioned before, income and ratios. So they're taking your gross income and comparing it to the amount of debt that you're going to hold. Down payment. So they are looking at where your down payment, closing costs, and cash reserves are coming from. They usually would like to see your money seasoned for 2 months. So if you provide 2 months bank statements and your money has been there the whole time, then that's great. But if they see a large deposit of 10 to 20,000 in the middle of those 2 bank statements, then they're going to question and source it. At that point, you'll need to source where did this $10 or $20,000 come from, and you can't say, unfortunately, that it came from your mattress. So so that is all important in preparing for the underwriter's review of your transaction. Okay, and then finally, of course, the property is the security for the loan. So they actually, the underwriter reviews the appraisal as well and has to put their stamp on the fact that the value is within reason for the market. So some other things that will come up in the process of your purchase is a title report. So I mentioned escrow and title. So escrow is basically the third party that transacts the money. Title is basically making sure that the person that sold you the house has the rights to sell you that house. So there have been times where there may be other people on the that own the home that you weren't aware of, and it comes up on the title report. And so all of the owners of the property have to agree to sell the property. And so that's where title plays a part. The property may not be in a trust and may be going through probate court and have various family members stating ownership for a property. So all of those things need to be ironed out in order for you to have a smooth transaction, and it's identified through the title report. Another thing that you can see through the title report is if there's any easements. Easements are common within the Bay Area where you have a piece of your parcel that is shared with another entity. Maybe it's a neighbor, maybe it's PG&E, but they have actually shared land that other people can access without your consent because it's shared ownership. Another thing that you will find out about with working with the title and escrow company is vesting. So how you will hold title. So based on how many owners are on the property and if you're married or not married will determine your how you'll hold title. And so that is a very important piece. And another piece to look into after, in addition to purchasing, is a trust. And a trust basically helps you solidify who will inherit your home in case of your death. who will be basically the legacy that will carry on your inheritance to them. And that's very, very important. And a thing that's highly missed in our community is setting up properties in trust. So when you don't set up the property in trust, it usually goes to court, and the court has a set fee that lawyers will be paid to basically handle who's going to get ownership of the property. So that's taken away from your equity, your legacy. And so it's very important to set those things up in advance. Another thing that you'll be working on throughout the purchase process is homeowners insurance. So you have your mortgage payment, which is your mortgage and interest, but there's also taxes and insurance. So you have your taxes, which vary, but then your homeowners insurance will cover your home in case of anything happening, fire damage, or you basically are looking at replacement costs. So what is it going to cost to rebuild my home in the event that in the event that I need to replace it? And so one thing you saw with the fires in Santa Rosa and those various different areas is some people's, their replacement costs was not sufficient enough to rebuild their homes because they didn't go back and review their homeowners insurance. And so they then decided to move to other areas to rebuild because it may have been too expensive to rebuild within the area that they're in. So you want to have that conversation. You also need homeowners insurance if you are purchasing a condo. So there's a master policy that covers the exterior of the condo, but you still need homeowners insurance for your personal property within your condominium or townhome unit. Other optional is earthquake insurance, and then there's flood insurance. So if you are purchasing in a flood zone, which happens in various different areas, Sacramento, Stockton, you are in a flood zone, you are required to have flood insurance. So it's very important. When you're going into contract, you'll receive something called seller disclosures. And those are disclosures where they basically disclose to you everything that the homeowner knows to be true about the property, as well as things like the natural hazard report. And so it's very important to take some time and read through those disclosures at the beginning of the transaction to understand the property and the history of the property and what you're purchasing. So we're at a point now where we have gone through the inspections, we've done our appraisal, our loan is approved, we've given letters and proof of all the stuff that the underwriter has requested of us. And you want to do that. One thing that I have to make is better to just get what the underwriter wants in versus debating why they need it. So you get all those documents in to stay on time and stay on top of things. The underwriters need to make sure that they are telling the bank that we are lending to someone that I feel is suitable to carry this loan. So get them their documentation. After you remove all your contingencies, then it's time to close escrow. So once you are preparing to close, you want to do your final walkthrough. Now, again, remember, we've already done our inspections and removed our inspection contingency. So this is not the time to still negotiate. At this time, we are making sure that the house is still in the same condition of which we saw it when we first put in the contract. So making sure that, they didn't move the couch and there's a huge hole in the wall, or you saw a stainless steel refrigerator and it was gone, and you had wrote in the contract that this stainless steel refrigerator stays. So those sort of things is what you're identifying through the final walkthrough. And then you are preparing for closing. So one thing that is very important, and I cannot reiterate enough, is when you get your pre-approval to go over the loan estimate and talk with your lender about loan closing costs. So they initially, when you're saving up for a purchase, you think down payment. I need 3%, I need $5,000. If you're getting down payment assistance, there's various different amounts that you can have for down payment. But then there's also closing costs. And so you want to make sure that's usually around 2 to 3% of the purchase price as well. So you want to have a clear expectation of what those costs are. Now, in this market that we are in currently, you may be less likely to request these closing costs from the seller, but it is an option. In some markets where it's a buyer's market, which it doesn't happen to be now, but if there was, the seller could contribute to your closing costs. And so it's really important to don't go in thinking that, oh, this cost is going to be covered, I'm going to negotiate it. No, you want to know what it is up front and have something prepared. Now, if you're able to negotiate through something through the contract, like with the inspection contingency that we discussed, then that's great. But we want to be prepared in advance, because you are in a contract and you are obligated to close. And at this point, you've removed all of your loan appraisal and inspection contingencies. So your escrow money deposit, your earnest money deposit is at risk at this point. So from there, you basically will go to the closing appointment, sign your docs. Right now, during the pandemic, title companies are sending out notaries to your home or to a business location for you to sign your loan docs. Then your loan docs go back to the lender to fund. So they're sending money to all the appropriate parties. Once your loan funds, it's not over there. Then you then have to have the title and escrow company has to then go record with the county. And so after the recording, not after the funding, but after the recording is when you're officially the homeowner and you can get the keys to your property. So that basically concludes my first intro to you guys of the home buying process, which is a lot of information. And I don't know, John, if there's any questions or where you want to go from here as far as.
So we're going to look and see if anybody have any questions in the group. I don't see anything right now. I mean, the presentation was well put together. It was very informative. A lot of the questions that I was going to throw out there, you already kind of covered. So, I mean, that's why we have you coming, because you're so
right.
you're so intentional with your information.
Right.
Yeah, one of the people that's in the guest said you spoke well for yourself. Rico, you have any questions? You have any questions you want to ask her?
Of course, I have questions. So I'm always looking at it from a different perspective, especially as it relates to our community and getting our underserved community prepared for home ownership. And what are some of the steps that you would, tell folks who are underserved, who have dreams of wanting to own a home? What are like some of those first steps that we would suggest to those folks to just get them taking those baby steps to get into home ownership?
Well, there's tons of nonprofit home ownership programs. So I had mentioned that I'm the president of Women's Council of Associated Property Brokers. We do workshops every month. And then you usually, if you're a first-time home buyer, to get down payment assistance, you need to get a certificate from one of those programs. So I also work with Richmond Neighborhood Housing Services. They're another nonprofit, and they basically work on individual classes. So they do like budget classes. So you want to go to a class that talks about budget and how to budget your money, how to understand taxes, because now that you're a homeowner, you have a tax write-off. So there may be some benefits of you getting into a mortgage that's higher than your rent that you may not be a little comfortable with, but there may be some tax advantages that may even out the playing field on that. So I would definitely say a starting point would be a home buying, a nonprofit organization that focuses on home buying and debt budgeting and that sort of thing. And there's Operation Hope also in Oakland. So one of the members of Operation Hope, she sits on my board for Women's Council as well. And they do adult and teen financial literacy.
Okay, cool. One thing that I could ask for people who may don't know, can you kind of break down like the different type of home ownership from like single family, multifamily, and then talk about the HOAs, because some people buy homes, these newer developments, and they don't understand the HOA process. If you can kind of explain that, I think that'll be just something good for people to hear about.
Okay, so if you're looking at single story, 2-story, 3-story home, but basically it's one living unit, then that's considered a single family residence. And so it's very important to know if you're looking at down payment assistance or getting pre-approved, what you're pre-approved for, because you may be approved for a single family residence and find a duplex that you really like. So a duplex would be 2 units. So government financing, FHA, allows you to buy up to 4 units with 3.5% down. Which is great. But most down payment assistance programs only allow you to buy single family. There are some that allow you to buy multi-unit, but for the most part, it's single family. So so the benefit, of course, of a duplex is that you have potential rent from the other unit. And so and that's been a big controversy in the Bay Area, because a lot of the rents for some of the properties that people are purchasing have tenants that have been in there for years. And so the rents are lower than what the market is. And so lenders have a requirement of you to qualify for the 2 or 4 unit property. Your market rent and what you're paying in mortgage have to be at a certain number, which is identified through the lender. The benefit, though, is the lenders will take those other unit rents and take 75% of that income and add it to your income, so that you qualify for more house when you're buying units. So that's definitely a benefit. I mean, units can be far and few between for most first-time home buyer purchase levels, but they're out there. They're through Northern California, Oakland, all the way Stockton, Sacramento. I mean, you have duplexes everywhere. So if it's within your price range, I definitely recommend that being one of your first options. One thing that you have to think of too, when I'm going to talk about HOA dues with a condo. If this is not going to be your first purchase and you're looking at investing in property, your first purchase, think about it being as your future investment purchase. So some people may start off small with a condo because it's less maintenance, and they plan on moving up later and renting out that condo, and they'll have less maintenance on a condo with a tenant than a single family home. So with a condo, people usually steer away because there's homeowners association dues. And those dues are usually to maintain, like if there's a pool or a clubhouse, maintaining that area. If it's a townhome, the HOA may cover the front yard maintenance. It may cover the roof of your property, the sidings. So all HOAs or homeowners associations are different. So it's very important, if you're purchasing a condo, you read your homeowners association packet and understand what they're covering with that money. And it has its pluses and minuses, because there's a lot of things that people just don't want to maintain with a house that makes a condo a more attractive option.
So right now they're talking about a lot of defund the police and a lot of money that's going back into the Black community.
Mm-hmm.
And they're trying to create infrastructure for the Black community as it relates to Black institutions, banks, Black broker firms, Black appraisers. I mean, like, and these are some of the calls that I've been on, right? And it's a blessing that I now have met you, because how can we get you on some of those calls so that you can start being a part of some of those conversations? I know you're probably super, super, super busy, but definitely we do need that type of infrastructure, especially here in San Francisco. A lot of people, that's been the talk, is how do we get Black owned in our city, especially because they're going to have a piece that talks about homeowner assistance, Black homeowner assistance. Mm-hmm. And we're definitely going to need some type of support around that, and like, what does the infrastructure actually look like? So if it's okay, if I can send you the information about those meetings, because it'll be good to have you on there and give your insight around that that system and that structure.
No, definitely. It's just let me know when. It's nothing but a phone call. Part of my brokerage is being invested into the community of which I do business. And it's very important that we advocate. And so one thing that I didn't mention is the roots of the Women's Council of Associated Real Property Brokers. It's part of a national organization, the National Association of Real Estate Brokers. So at one time, as African Americans, we were not able to be realtors. And so when we weren't able to be realtors, there were a group of African American brokers that came together and created the Realtist, and they still exist today. And so this is a national organization that fights for democracy and housing for African Americans all over the country. And it's a continuous fight. And I'm a part of that organization. So I would say a call like that wouldn't be anything from what I'm already doing already. And it's a part of my mission, and I'd be happy to join. Because one thing that's really important when those programs come out is having people in the real estate industry and that understand what the obstacles are when you're trying to get approved for a loan. Some of these down payment assistance programs come out and the requirements are just so absurd. It's just like, so who, how many people are going to get that money, So it's really important to have lenders and real estate professionals at the table at those conversations, because we don't want to make it sound good, but then we're advocating for something that really is not attainable.
Right. And I know some of our candidates that's running in San Francisco, they're talking about land trust for the Black community. Right now, it's only 3% in San Francisco, and gentrification has really just pushed out the Black and brown community. So
Right.
definitely that's one of the biggest things I think they're talking about. But yeah, Rhea, can you definitely verbalize all your social media handles and ways that people could get out to reach out to you? I think that's important just to verbally say it, put it in the chats if you like as well, because we're going to replay this, cycle it. I know some people in traffic trying to get home. And I know we have a couple of people we've been working with on our financial literacy end. They're getting ready, position themselves. And here's a good sister. That's why we brought her on here. One thing at both sides of the conversation, we want to bring people in here that are intentional, they are professional, they have their stuff together, and they walk you through the process. And Rhea definitely is that. And that's why we glad and honored to have her on tonight. So yeah, Rhea, if you could just give out your information to everybody.
Sure. So, my name is Rhea Cotton with Cotton Realty, #the fabric of real estate. And that is my Instagram name. So you can look me up, the fabric of real estate, to find me on Instagram. I'm under Rhea Cotton on LinkedIn and Facebook. And then I have two websites. I have my personal website, which is rheacotton.com. And then I have our company website, which is cotton-realty.com. And my phone number, 510-385-0409. You can call me, you can text me. If you call, I'm going to answer, so don't get surprised. Sometimes I do seminars and then people call me and I answer. Yeah, I am my office, so you call me, you calling me. So.
Right. Thank you very much. I mean, and that's one thing in our Black community, we just, promoting and definitely, it just makes it more easy. Like I tell people, Rhea's down to earth. She'll walk you through the whole process, answer all the difficult questions. I'm glad you talked about the underwriting process, because it is a process. And I know as Black folks, when people ask us questions, we get defensive, and they will ask you anything like, why did you take this out? Why did you take $2,000 out the bank 2 weeks ago? And it's good to have somebody like you to help walk them through the process. And we know you have a wealth of knowledge and a wealth of network. So definitely, if it's something somebody's asking, we know you definitely will, sniff out the information for them and make sure it happens. So, and thank you for coming on, and thank you in 2 weeks for coming back to talk about the contract process. I think that's especially for first-time home buyers. I think definitely they need to definitely be a part of that, because I think that's where a lot of people get lost at in the contract process, and understanding how to finalize and close the deal after they found the house that they like. So I'm just looking forward to that. You did a tremendous job tonight with the information. I mean, basically, I'm seeing why there's no question, because you made everything so ABCD, just basic fundamental information, and the presentation was beautiful. So thank you again for just being intentional with your information. Someone that's just buying a house, like they just got gems right there. That's millions of dollars worth of information right there. Hey, Rico, you got anything else you want to say before we end this?
Yeah, I just want to say thank you for coming on. I will definitely be in contact with you as someone who's very close to buying a home, but then also for those conversations around like how do we create institutional wealth and how do we create a mechanism where we're supporting Black business for San Francisco. So I'll definitely send you an email to make sure you're on those phone calls that support us around this piece or this bucket that we have a part of our subcommittees to make sure that we can get Black folks in San Francisco prepared to buy homes out here. So I'll definitely be in touch.
Okay, thank you. Thank you for having me. And yeah, I'm looking forward to that phone call and being part of that conversation for sure. Definitely.
Yeah, definitely. Well, that is it for Educational Thursdays at both sides of the conversation. As we mentioned earlier, if you have time this Sunday, tune in. We're having a powerful conversation. We have some great Black professionals that's going to be coming on. We're talking about mental health. This is the third part series. The first part, we had the Black Panther Party from Oakland on, talking about the health programs that they had. Last week, we had our medical professionals talking about health in the Black community, as well as mental health. And this week, conversation is focused on all mental health. We have some great clinicians, some great psychologists, some nurses that's going to be on the hat to help mediate and facilitate this conversation. And I think this is important because in the Black community, we deal with so much trauma and things, and this is going to be an important conversation. And then we'll be leading off into our hidden gems next week. We have some amazing hidden gems for next week's show. So please tune in. Thank you again, Rhea. We'll definitely cycle this and get your information out there. A lot of times after these videos, we get a lot of people calling and asking, so we'll definitely be funneling your information to them. And we're looking forward to seeing you in 2 weeks to come on and talk about the contract process.
Hi.
All right. Thank you, guys. That is it for tonight.
I just want to say support Black people. That's all.